What's up everybody? It's Omar. It is Saturday, December 9th, 2017, 9:25 a.m. in the morning. And I just wanted to make a follow-up video to the video I made on Thursday night talking about Fibonacci, and just review a couple of plays talking based on Fibonacci that we talked about. Let me see if I could pull it up here. So let's go here. Yeah, I'm looking at trading it. I may open a small account, like a $3,000 account. I love shorting, and there's a lot of stocks that a lot of times I can't find shares available. So I'm thinking about opening a TradeNet account. Not, it's neither here or there. I know some people have done it, and it's there's pros and cons to it, but it's a minimal investment, and you get a lot of leverage. Plus, you can short pretty much anything. $5 and up. Some stocks below $5. It depends. I spoke to someone on the phone, so I'll keep you guys posted on that. But just to let you know, let's review this real quick. So my handle is watchotrade. I might go a little silent another week or so, just for a week while I finish up some things, and then I'll be very active again. Not sure, but this is the video I made about Fibonacci. So with the video, because people keep asking me, like, I have these automatic fibs. So I have these automatic fibs already set, like the script that gives you the automatic fibs right here. This is the 3 key ones, the 38, the 50, and the 61. People ask me, how do they upload that? Basically, what you're gonna do is, so when you see here, I get a little description here, right here, this little link. What you gotta do is you gotta copy this. So you copy the link, and then you go into you don't see it here, but it's right above. There's something called setup, and when you click setup, you gotta go to where it says open shared item, and then you paste it. You hit Control V. And then you hit preview, and then you hit open, and it opens up. I already have it there, but that's how you load this, and what it will give you is everything. So this is the previous day's close price that's included in the script, the Fibonacci's. You also get this, it also gives you in the script, like, where is the high and the low, or the low and the high, the 78, the 61, the 50, the 38, and the 23. Now, the only ones I focus on in the script are the key ones, which are the 61, 58, and 38. But in the video, I showed you how you can set them manually if you want to set. So I'll talk about that in a moment. But you also get the 20-day simple moving average is the 50, the 100, and 200, which also can play key support and resistance numbers areas. And what's cool about seeing it up here is that you don't have to have all those lines on the screen. So it's just so that your screen can look a lot clearer, But if you follow me on Twitter, I called out a couple of plays yesterday. Let's see if I can go. Let's pull this up real quick. Sorry about this. I should have probably prepped before I did this, but yesterday, just to show you how powerful fibs are, and just to prove my point, well, I didn't trade anything. I was just looking, because I just got so much going on at work, and I thought about just putting some trades and putting some stops, but I didn't. I should have. I would have banked pretty heavily if had I. But look what I wrote. Look at Macy's, retraces back to the 38 level, and now at 24.85, was at 24.85, now at 25.15. Fibs work bull or bear market, right? So I talked about Macy's, I talked about Tops, how it retraced back to 61% and then get a quick bounce and then it crapped off. I talked about GLBS, BAC, and BAC. That's what I meant to say here. It says BAD. Now let's talk about those stocks. So let's talk about, let's put up Macy's. Let's talk about Macy's. So remember what I said about let me just remove this for a second just to show you. So what did I say? I said, let's remove the drawing. I said that when you look at fibs, you look at a 2-day chart, and you're gonna plot the trend either from the high to the low or from the low to the high. So either from the highest point to the lowest point, or from the lowest point to the highest point, depending on where the trend is. All right. Now, because Macy's and today's Saturday morning has not broke above the high point of Thursday, which was a 28,596. The trend, technically, this is you're still gonna mark this from the highest point to the lowest point, and that's where these fib numbers are coming from. So this is the 2-day 15-minute chart. This is the 2-day 1-minute chart. This is the 2-day 5-minute chart. And this is the daily chart. So if I plot it manually, just to show you, I could just take this, right? And I already have my fib set. So what I did was I came here to drawing tools and I click on Fibonacci retracements, and I just click on one point and I click to the other point. And if it's not, correct, I can always right click edit and do 2596. And when I hit OK, you're gonna see that you shouldn't even be able to see the low is what, 2416, the high is 2596, and you're gonna see how you can't even really see the white lines, because that's where those fib numbers are coming from, just to explain how that works. And look what happens. All right, so look what happened yesterday. Right, this thing, for whatever reason, it went from a low, and this was on the 7th. It hit a low of 2416, and then pre-market it starts gapping up, right? And it got to a high of this 2558. And you notice here, let me just zoom in here. You notice it sort of it sort of double tops right here. You see how it kind of double tops right here? It's hard to tell, but let me show you here on the 15-minute time frame. You see how it double tops here? That's a very bearish sign that the stock is going to give some of it back. But think of it this way, right? The stock is up here, and look what happens when the market opens. To show you how deadly accurate fibs are. The market opens, right? And this is a bearish sign anyway, but look what happens. The stock starts retracing, right? It bounces off the 50% retracement, all right? Let me just zoom in here. Let me just move this over, actually. Make it easier. So it bounces off the 50%, and it dips below it for a second, but you see the hammer is up here on the top. It dips below for 1 second, and it hit a low of 25 bucks. The 50% retracement was 2406. It kind of bounces up. Look at that. It literally touches that the low 2407. Gaps up. So I mean, literally, you could scalp this quickly. But look what happens. Then the stock gaps down, right, to that 38% retracement. And once it hit that 38% retracement, which was 2485, it briefly dipped below that to a low of 2483, and we saw it here. It hit a low of 2483. It kind of like double bottomed there, found its support, and this is where you could have took your entry. Okay, and basically what this is telling you is that it's on an upward trend, and look what happened. If you played the bounce, the 38 retracement, right, 38% retracement, and got in there, you could have rode this all day. And look, it kind of gapped up, it pulls back, and then you see these flag patterns. So you see how it gaps up, forms this flag. So this is just people just taking profit. And when you get a flag like this and it breaks above, you're gonna get another push. And you see, you only had these little flags. But look here at the 50%, once it retraced back to 38 and it starts that upward trend again. You can see here, once it broke the 50, gaps up, pulls back, right, forms this little flag, and look at it, retraces right back here, that 2506. It literally touched 2506, which is so crazy. And and you see now it's kind of holding that support, it's getting some volume, and you could have took it here for a ride, and you could have got in on that and that momentum push up. And and you remember, the trend is your friend, so you're riding that trend up, and it retraced all the way back up, and it broke above that 61% retracement, which is, when it's up at this stage, and it holds, that it's back on a bullish trend. And what I would be looking for Monday to see, is it gonna break this 2596 level, and if it does, this is probably gonna continue to run over 26 bucks, so you know, I'll be looking Monday to see what it's going to do. But that's just the power. I just want to tell you the power of retracements and how they work. You know, this is all based off support and resistance, you know, which is pretty powerful stuff. You know, even if you looked at it on the 15-minute, look at that. You got that pull to the 38, holds, retraces, and just runs. Same thing on the 5, you know, nice, easy. Look at that. Literally touches it and then just takes off, you know. And then you look at that daily candle to make sure that it's green. And that's telling you, hey, you know what? This is telling me that, you know, it's strong. Volume is strong. It's going to push up. And, you know, it's Christmas season, too. So all that helped. A lot of these retail stocks ran. So I also talked about Bank of America. Let me pull out Bank of America. All right. So look what happened with Bank of America. Now, this, I like this because, let me remove this just to sorry about that. Now, when you have a stock, right? So Macy's went from a high trend to a low trend, and now it's gapping up. Now, what's great about this is when you get the low trend to the high trend, right? So it started low, so this was the low. So this is the trend, right? When I did Macy's, I started from, so Macy's, let me pull up Macy's again, right? The trend starts at the high point over the last 2 days, and we went from high to low, right? So I literally went from the high point, which was that 25.96, all right? And, you know, I'm not going to be exact. And you go from high to low. So, you know, so it's starting at the 100 and it's working way down to 0. When you go from low to high, you go from 0 up to 100, all right? And that's the, so Bank of America was in a different trend, right? So just to call that out. So here, so I start at the 28.37 level. Now these are already set for you. You don't even have to do this, but I like to show people how you can manually set them too, because maybe you just want to do this manually. Right, so it goes from 28.37 to 29.15. Let me see if I can set it right. Good. All right, so I set it right. Now, okay, when you get a move that happens pre-market, like such as it did here, right? You know, and you know, it's not breaking that high. What's happening is, if it doesn't break that high, you got to expect people to take profit. And that's what the retracement is. It's people actually taking profit. Short sellers also shorting the stock. If you notice here, you had this double top, just like with Macy's here in the pre-market. Look, it kind of couldn't break that high. That is a very bearish sign. And what it's telling you, short sellers see that, they're going to try to short the stock down. And also people who have profit, who bought, you know, the previous day down here, they see that and they're like, oh shit, let me take my profit because I don't know if this is going to continue up. And look what happened when the market opened. To show you how deadly accurate these stocks are. Let me remove this. Look what happens. Market opens, you get this hammer. That's usually a sign of that there's going to be a reversal and stock, it's going to suffer. And look what happens. The stock literally retraces where? Back to the 50% line. Literally touches it, which is at 28.78. Okay, and the way it works, and this is how I learned this on YouTube. I don't know if I'm right or wrong, but this is what I learned, that when a stock retraces all the way back to 61% off its high, that's like kind of people took all their profit. That's the rationale. So up to that, if it doesn't get down back to that 61, that means there's still people who have shares that haven't took their profit, and you can expect at some point for it to pull back to this 61. Not the same date, but it's telling you that it's still in a bullish trend. And once it breaks below 61, it supposedly means the trend is over. That's what I've learned by watching videos. Okay, now look what happens here. Stock gaps down, right? So stock gaps down. It's in this trend, right? Downward trend. All right, literally touches that 50% retracement. All right, it has this little pop to the 38, gets rejected by the 38, kind of comes down and gets right to about that 50. You know what this is? It's forming that, you know, pattern where, you know, it's gonna, when it holds, a lot of times you're gonna get another push. And if you're looking at the 5-minute, you could start in the 5-minute here and the 15-minute here, you could start to see the trend reversal. You know, it got rejected by VWAP here, so it's still in a bearish trend, but it's not breaking that 50% retracement. So right in here, if you see the volume push, you can come in and take a stab at it, you know, risking that 50% retracement, or the next level below, which is that 61% retracement. Say, hey, you know, this is my stop. If it dips below that 61% retracement, I'm out, you know. And look, it, you know, gaps up, pulls back, but it never breaks below that 50% retracement. Look, it literally almost touches it again here. The low was 28.77, and then it was, you know, about 10 o'clock, you know, it starts gapping up, breaks VWAP, and then it's just off and running. You know, it's off to the races, you know. And, you know, if you would have got in at that 58%, which is, let's say, 28.80, you know, you could have rolled this all the way up to a little over 29 bucks, you know, before it retraces back down, you know, kind of plays around at that 23 level. And, you know, it's telling you now it's in a bullish trend, and it's up, you know, after hours, it's still holding, you know. So, you know, we'll see what happens Monday. Maybe it retraces back again at the open and then continues up. We'll see. Or it breaks through. We'll see. We'll see. But I'm just trying to show you how deadly accurate fibs are. Okay, so now with that said, I also talked about XNet, and in the previous video, I talked about how I like to take shorts when stocks are when stocks are like when they reject when they're up on a high like they were, and they're starting to pull back over 2 days. When they break below that 38%, I like to take a short, because that's telling me that all the profit taking is done once it breaks below 38% off the high. You know, when you're starting from a high trend down to a low trend. I'm sorry. I'm making it. I'm sorry. So before the market opened, this you know, this closed at a low of 1181, but the low was like somewhere, you know, it broke down below that 38%, but it was, the 38% was like somewhere in here when the market opened. It was, the low at that time was like, I don't know, like 1230 or something like that. And I talked about XNet being a great short at the break below 38%. So that's the ending of the day low. So the low kept, you know, the stock kept gapping lower throughout the day. So what you got to keep in mind is, you know, if you're going to use this and you're going to do it manually. Now you have the automatic fib set, but if you're doing it manually and the market opens, you know, as the stock breaks lower, you got to keep changing the price, you know, in order for it to continue to maintain its accuracy, you know. So, you know, right now it's at 1181, but when the market opened, like the 38% was, I don't know, was like at let me zoom out. Sorry guys. It was like, I don't know, this is the 38% retracement here. It was at it was like somewhere a little below $13, and it was like it broke below that 38 for like, I don't know, like 60 cents. So when I posted on Twitter, that's what I was talking about. You know, the price actually dipped lower throughout the day. But nevertheless, when I talked about the video yesterday, I said when a stock is gapping down and it breaks below that 38 level, and this is the 38 level, I like to short the stock. And if you notice here, you know, it's breaking below the 13 EMAs, below VWAP, all signs for pointing to a short. And look what happens towards the end of the day. You know, it starts breaking the 38 level here at that 1274, and you see, look, it taps it, but now it's acting as resistance. And look, it kind of gaps down, gaps up, and look, never breaks above it. That is a sign to short the stock. And you know, you could have took this down and shorted this. Now I have a Thinkorswim account. Thinkorswim is shitty for day trading in the sense that the executions are horrible. And, you know, their short list has gotten a lot better, but a lot of these stocks like XNet's hard to borrow. And in order to be part of that program, you got to fund your account with 100 grand and then apply to the program. That's why I was thinking about, and I had a Centerpoint account before, but I closed my Centerpoint account only because I can't access it at work. It runs off a DAS platform and I can't access it. So I was thinking, this is my rationale to open up a TradeNet account. And I think you pay 3 grand and they fund you with 80 in cash, and your max loss is 4,000. So as long as you don't dip below 76,000, you can trade as much as you want. No PDT rule. But they take so they take 25 cents on every dollar you make, because the profit split is 75 25, and it's about so for every 1,000 shares you want to buy, it's total cost is $7.50. So it's $15 to buy and sell 1,000 shares of a stock. And the reason why I use 1,000 is because I like to buy in 1,000 share blocks. But they're fantastic. Like TradeNet, they had like when HMNY and all those stocks were running a few months ago when nobody could find the borrows, they had them. There's no borrows either. It's like you don't pay for borrows, like, so, and they have a lot of shares available to short. You could pretty much short any stock above $5. So that's my rationale, and I think I'm gonna give it a shot. So I'll keep you guys posted on that. But so with Thinkorswim, I wouldn't have been able to short this because I'm not putting 100 grand in Thinkorswim. I mean, if I make 100 grand in Thinkorswim, I usually pull it out. I'm not gonna keep that trade with that much risk. So yeah, you could have took this short. That's my point. So what you do is, like, let's say if you're looking at a stock like this for Monday, you should always, so if you're gonna do the manual fibs, you wanna start from the high point to a low point. And here it is, 1181. And there you go. So Monday, you can look at this and you can see, all right, where is it at post market? It's kind of, a lot of people shorted here. So what our expectation is that Monday, this is going to spike because all those shorts are probably going to cover, and you may see another move back up. So see if is it going to get, what I would be looking to see is it going to get rejected by the 38 or 50 or 61, and if it gets rejected, it's telling me still in a bearish trend, and I would short it based off one of these levels. And it makes trading a lot easier when you play off fibs. Now there's some people that hate on fibs and whatever, but I like them. I've never before, I was just using support and resistance. You can see a lot of my previous videos, but ever since I've adopted fibs, I love them, and things are a lot clearer, and I just love them. And just let's look at a couple other stocks before I end this video, just so you can see. Now another thing I want to call out is, here's an example. If a stock that isn't right, so Tiva 2 days ago, Tiva, I'm sorry, was it a low of 1434, and you can see how I already have this set because I've been watching these stocks. Let's clear this. I just like to do this just to show you. So all right, so over the last 2 days, we're going from a low point to a high point, right? And these are the fibs already set, the 38, the 50, the 61. So here's 1437, and it's a pain in the ass. Here we go. And 1633. Here we go. Okay. Now, what you should know is when a stock breaks above. So here, so if a stock has some catalyst and you see it start moving and it breaks above the 61, you take an entry, especially if it has, if you catch it. Now that's the key. You gotta catch it before it happens. But what I want to tell you is that when a stock breaks above that 38 on a bullish trend and it holds, that usually means that the stock is gonna just keep running for the rest of the day. Because remember, once it breaks here, it's at a new high and it's just running. So if you catch a stock that's gapping up, that was on a low on a previous day with some news and some volume, and it breaks above the 38 and holds, you could take an entry, a nice entry off the 38, because more than likely that stock is going to continue to gap up the rest of the day. And that's what Tiva did. And there was a couple of stocks like that. VRX also did the same thing. Look, runs up, you could, once it breaks that 61, you can take an entry there, and look, it gapped up, and look right here at the 38, it got rejected, right? Literally, it rejects at the 38. This is to tell you how accurate fibs are. But you see this flag pattern forming, right? So when you see a flag, you're gonna get a push, right? And look at that, it's far away from the 13 EMA, pulls to the 13 EMA, and then continues on up, and it doesn't seem like much, but if you have a sizable account and you take a push on here, you can get like, from, where is this, like 1842 to 1872, 1,000 shares, like $400 you just made, But when you see this and you see the stock break above that 32 and it has volume and it's holding, this looks like the ABCD pattern, right? Gaps up, pulls back, kind of double tops here slowly, but it pulls back and holds, and you're gonna get that push in the afternoon and it just rips. And right here, once it breaks above that 32, you can take a long here, and look at that. This thing is still running. It's at 1990 post market. I mean, it's on a tear right now. So what I would be doing is this would be on my watch list for Monday. It would absolutely be on my watch list if I was going to trade Monday. I'm not trading Monday, but if I was trading Monday, I would be putting this on my watch list, and and I'll just, so I got to fix this because it's 1665 is the low. And what I would be looking for is probably, you know, well, you want to see what it's going to do pre-market. If it keeps gapping up, you're going to keep changing the fib. But the fibs, right, to reflect that. But what I would be looking to see is, hey, is Monday. Well, first off, you always look at the yearly to see what the stock does. And this stock has been on a tear, right? Look at this on the yearly. Look at that. It pulled back to the 50 and then continued on up, you know, on the yearly. It's pretty remarkable how fibs work. Even for swing trading, they're fantastic. But look at this green candle. Look at this. You have 2 green candles. Usually, it's had 1, 2, 3, 4, 5. So it's had 5 green candles before. It's had a couple of red days. It had 3 green candles, and then it had a red day, then 1 green candle, then 1 red day, and then it had these 2 big. Now it's a little overextended, so I would think, because it's around $20, if I would look to see this probably retrace back somewhere to either one of these levels come the open Monday, and you can short into that retracement and then buy the dip if the and I don't know what's the catalyst behind the run. You know, I would you know, do the research, go to Yahoo Finance, whatever. But you probably want to see if, hey, gonna retrace at the, if it's gonna retrace to the, you know, one of these levels, you can buy the dip and then just play off the dip, you know. And you know, if you don't have a lot of money, and let's say you want to just take a swing trade on this, you know, once it retraces, the next time it retraces, you buy that retracement, and you know, you risk like whatever the low is. So you know, say, hey, if it, let's say it retraces back to 1866, buy just 100 shares and just leave it alone. Let's say you would have done that somewhere over here, you know, you'd be up, you know, $500, $600, $700, you know. It takes some time, but you can swing like that and not risk much. So let's say, hey, you let's say it pulls back to the 38 Monday. I'm just making this up. You can risk the 1789. So you know, you're risking $100. You know, if you got 100 shares, it's not gonna kill you. You know, and you can take swings on that. And you can literally trade like that and take swings, 100 share positions on swings, you know. So it's just something to think about, you know. And just let's look at a couple of other stocks. Just look at GLBR. Look what happens here. Stock gaps up, you know, gets rejected here, pulls back to the 50, and then just continues on up. So once you see that here, and you know, and you also see a flag forming, you know, you can get in on that 50% retracement and just take it and run. Once it breaks 38, you definitely take it on a nice move, a nice run. And you know, you see that trend there, you know, you're good on the 1 minute. You can just ride this up, you know. And look what happens. It pulls back right to the 38, and that's telling me that it's still in a bullish trend. And look, continues on up, you know. Look at that, and it's in a bullish trend. So and you know, this is probably some dog shit company, right? All these dog, you know, they all eventually go back to zero. But what you want to do is, you you look for the retracement and short either once it breaks below 38, retrace, you know, and or look for the bounce. And oh, look at that, I didn't even see that. Sorry guys. Look what happens post market. It did retrace, and guess where it retraced to? 61%, which is like considered like the holy grail. And it bounced right off it. So let's say you would have, you know, this is post market, but let's say, you know, you see the retracement. Look at that. It literally got just a few cents below it, but it kind of recovers right there, and you could have got in here at the 71-cent level, and you know, sold in the 80-cent level. Now it doesn't seem like much. That's 10 cents. Now a stock like this with volume, you know, now this doesn't have a lot of volume, but let's say if it did have a lot of volume, you know, you can make a sizable amount of money. So I'm just trying to show you guys that how fibs really do work, you know. Look at CTRL. I put that. I would be watching Monday to see this pull back, because I've traded this stock several times. It usually has big moves and then it just completely washes. You know, I'd be looking to see if it's gonna wash Monday. You know, I'm trying to look at some other stocks. Look at this CLF. Look at this, gaps up. You know, it breaks the 61% retracement area, right? Look, it kind of gets rejected. Pulls back literally to the 61 and then takes off. So if you catch these, you know, you could take these for a run. Look at this. And look at this. It broke above the 38, which is here, and look what happens. It pulls right back, literally touches it, and continues going. I'm just trying to show you guys like how fibs are amazing, and it doesn't matter the price of the stock. Look at PXS. All right. Look what happens here. Stock, you know, so this was at 353, so you know the trend starts here. Let me erase this just so this is the last stock I'll talk about, and then I'm gonna go enjoy my weekend. So let me move this. So here's 353, right? So the trend is starting here. So remember, so in this instance, it's from the low to the high, right? Over the 2 days, right? So we'll go here, low to the high, right? Ah, shit. Okay, here we go. Look what happens, right? You know, stops running up, you know, gaps up, pulls back. Now, you know, you see these, when you see this little flag like this, and you can see it easier on the 5 minute, on the 15 minute, sorry. You know, when you see that, you know, flag pattern like that, you're gonna get a push, you know, and you know, the stock just kind of blows through all these reports. Now, mind you, this is hindsight because it hit the high, but let's say you're tracking this as it goes up, and you're not, and you know, you're not comfortable, you want to see it hit a real high point and then look for the retracement so that you can play the retracement. Here's the high, and let's see what happens. Look what happens. The stock hits a high 645. So this is now legitimate at this point, right? Because this is the highest point in the day. And it starts retracing. Look what happens. It blows through the 28. It kind of blows through the 38. And look what happens. It literally retraces where? To the 50% mark. It hit a low of 503. So, you know, it was a few cents above it. Now, it went from that 503 to where? A high of 545. Now, in 3 minutes, it doesn't seem like much, but there are traders who do look for these kind of opportunities. They size in really heavy, like heavy, like mad ass trader on Twitter. He's a scalper. Somebody like him sees something like this, and they go in like 5,000 shares right in here, and they play this bounce, and they make like $2,500 in like 3-5 minutes. And that's what they do. They look for opportunities like this. When you get to your account to when it's sizable enough, that's when you can start making these kind of trades, and you look for these opportunities, and you size in really fast, and you get in and out really quick, and you make a lot of money in a little bit amount of time. Look what happens when it bounced off that 50. Gaps up, right? And you're gonna see that here's VWAP here. You know, here's the 13 EMA. It never even breaks above it, and it kind of gaps down. It never gets to that 68% mark, but it touches the 50, and guess what? On this candle right here, if you felt the volume, there was enough volume and the strength was there, you could have took this for another ride up, you know. And it got up. It went from 501 to 540. You know what I mean? Like, you could play these scalps. It doesn't seem like much, but look, it bounces literally off the 50% again, and you could have took, and it got all the way up to the 32% and literally got rejected there. Now, in theory, right here, you see this, you could take a short, and it doesn't seem like much, but if you get in, let's say 525, you know, this thing got down to 503. So if you have 1,000 shares, that's $200. You know what I mean? Like, when you start seeing the big picture, you can see how you make money. That's why you need a broker that executes trades quickly. Like, Thinkorswim is terrible for that kind of shit, you know, to be quite honest with you. So you want, I would recommend go with IB. If you can go with Interactive Brokers, go with them because their executions are good. Or Charles Schwab, they got better executions and they're much, much faster. You know, E-Trade, it's not a bad brokerage, but they're glitchy. Their system's always fucked up. So I have an E-Trade account too, a small one. You know, I use it from time to time, but I don't particularly love it. If I had the ability to access it at work, I would be with Centerpoint right now because their executions are lightning fast. You know, but what I'm thinking is I might use this. I might continue to use this more for longs. And use that TradeNet account if I can access it at work. That's really what it's gonna be dependent on to really get in my shorts. And look, you know, and you see how it just rode that 50% all day. So this was sort of like that, you know, if we look at the stock, you know, it had that crazy run up, it retraces back, you know, it retraces back to that 50, kind of got that sideways consolidation, and you know, it just ran again, you know, gapped up again. And once it holds that, and you see it's not breaking that, it starts forming higher lows. Look at that. Had you just went in on the 50 and held this thing got back up all the way to that 23% level, which is 576. And then look what happened. It retraces back. And then what I would have done is, if I'm watching this and I'm seeing that it's getting rejected by the 38, you see this double top right here? You know, right here, if I had the ability to, I would short it, risking the 533. And look at this, you could have shorted this thing. What did it do? It retraced back finally to the 61% level, and you could have bought off that bounce, and it got up to that 50% level. But look, it got off its late, but it ain't holding. You need to see the candles break above it and with some volume in order to play it safe. And held that 61% level, which means that pretty much all the profit taking was there, and here's the shorts covering because they see it's not breaking below it, and that's why you got this. The reason why this spike happened in the end of the day, it was the shorts saw that it wasn't breaking below this, and they were like, fuck this, I'm not holding this over the weekend. So they just took their profit. They all covered, and that's the artificial spike. So we'll see what happens Monday, But I just wanted to show you guys this and how fantastic fibs can be. And when I look at another stock that went crazy. Fridays is like the worst days to short stocks. Fridays usually are the days where stocks have their runs, and you can see a lot of stocks went crazy on Friday. Look at this. This stock retraces back. It got below it, almost at the 61, but it's kind of like pulling around that 50, and you get that volume here. You could take that entry here, and it's gone. IMU. Look at that, another stock. Look at this. Market opens, retraces back to that 50% level. Doesn't get back. Doesn't get lower. And then it's off to the races, So, I hope you found this helpful. And, if you have any questions, just let me know. We'll be looking to see what's going to happen Monday. Build your watch list. Look for stocks that have been beaten down. Those are good stocks to put on your watch list with volume, and stocks that are like this, gapping up, holding their highs or close to their highs, because they're going to be volatile, and you want to play the volatility. You want to be a sniper and wait for that retracement so you can play the retracements if you're going to use the fib strategy, right? So hope you found this helpful. Have a great weekend, and talk to you soon.